Hello, everyone, and welcome to the Investment Funds Forum on Edison TV. My name is Victoria Chernykh. I'm an investment director at Edison Group. The topic of our forum today is investing in renewable energy with a focus on solar. We have two guests, industry professionals, discussing the topic with us. This forum is designed to be thought-provoking, facilitating investment decisions, but it is not in itself an investment advice. Our first guest is Olivia Eijking. She's an independent consultant in the renewable industry, and she's been within the industry for many years, starting at the energy industry at the initiation when the renewable energy wasn't even known as it is known right now. Olivia is a founder of a consultancy, her own firm called Kreen, which you can see at the background, the logo, and she connects investors with project developers within the renewable energy space. Her specialty is structured finance, and she tends to specialize on deals within so-called new markets or emerging markets, such as the ones in Central Eastern Europe, Latin America, or Africa. Our another guest is Ricardo Pineiro. He's a partner and the head of UK Solar at Foresight Group, where Ricardo's worked for over 10 years now. He's also a very experienced industry professional. He spent years at Espírito Santo Investment prior to joining Foresight in 2010. And at Foresight, he has overseen co-led acquisition of solar power plants, over 70 solar power plants with the 1 gigawatt power energy in total for all. Ricardo is also portfolio manager of Foresight Solar Fund, an LSE quoted investment trust with the total assets of over £1 billion. Olivia, Ricardo, welcome. And well, I mean, let's start. Olivia, let's start with you. When you joined, as I mentioned, the industry, renewable energy was in its very nascent state, and it didn't exist as we know it now. So what's happened? I mean, can you give us the backdrop for the industry as it is now?
It's not really that I joined really when renewable energy did not exist, because that would make me extremely old. It's true that I started my career in oil with Mobil Oil, so definitely in the petroleum spectrum. And I think the renewable energy started a long time ago, and the technology, especially for solar, has been developed for a long time. It was just that it was the sentiment. It was that not a lot of people were believing in it, in the general public for sure, and that has taken a little bit longer to take off anyway, but also in the investment industry. And I think what we've seen in the last, let's say, 10 years is a very rapid increase in appetite for providing investment in our area, in wind and solar. So this is wonderful, and we believe that it's just the beginning. So we see a very big wave to continue for the growth of the renewable energy installation. And what we have seen more specifically in solar, and maybe in almost the last 2 to 3 years, and looking forward now, is an explosion of new technology, cheaper technology, better acceptance by the public. And just, you know, a lot of other industries have started to understand that they could integrate renewable energy in their own chain, be it solar at home, plugged to your electric cars. A lot of companies with big parking space now provide solar roof on the parking space, so the employees can plug their cars. Any new building, like a big new building in modern cities, I'm thinking of Paris because I've been working with architects telling me that must integrate energy sufficiency, renewable energy on the roof, for example, solar energy installed on the roof. It's an absolute must do. So we've definitely seen a shift in thinking and perception, and that's exciting for us.
Yes, that sounds very exciting. So getting to this kind of renewable energy equation and knowing that Ricardo is a solar specialist, Ricardo, where does solar fit within that space that Olivia's just described?
I agree that solar has been increasing its presence and its penetration as an energy source, especially in Europe, which are the markets that we're most familiar with. And we don't see that stopping anytime soon. In fact, we think that the presence of solar technology as a way of generating electricity will continue to increase over time. What has still today more impact in terms of deployment of generation capacity is still what we call a large-scale ground-mounted solar, which is essentially installing solar panels across fields, as we have all across Europe. But as Olivia was mentioning, that other applications are starting to be considered, ways that will change as well how we think about city architecture in terms of how we think about how we consume electricity and the needs we have from a group perspective. And solar is showing that's ability and a way to adjust to the needs that we have in terms of energy consumption moving forward. But again, in terms of where we operate in that sector as Foresight, our focus is predominantly on what we call large scale and rooftop installations. Although we do manage more large scale assets at the moment that rooftops, but it will continue to be an important part of the energy mix of any European market that is trying to decarbonize its economy and its energy generation profile.
And for Foresight Group, because you're a partner there and you were head of the UK Solar, so Foresight puts quite a lot of effort into the mix of renewable projects that they operate, right?
I mean, we essentially, we're fund managers. We're focused on a sustainable approach to investment. We have a strong presence in renewables, solar. So Foresight, as a group, we manage around 3 gigawatts worth of generation capacity. Half of that is solar. We have a very strong presence in the UK, and we try to deliver as well to our investors is access to an investment opportunity that has that energy component that participates in the energy transition that we're experiencing at the moment, from moving from fossil fuel energy generation into renewables, while trying to deliver a sustainable return for our investors. So that's our role in the industry. That's what we're trying to deliver. We think solar within the renewable technologies has a significant number of opportunities ahead of it. Historically, we have seen how renewable technologies, including solar, relied on subsidies paid usually by taxpayers. That obviously has a cost associated to it. But as Olivia was mentioning as well, the cost of installing this sort of technology has been decreasing significantly over time. So we're now reaching an exciting period where you start to see solar parks that already deliver an attractive investment return, even without the presence of those subsidies. And that's the key milestone for the industry, because it will allow, I would say, an accelerated growth in terms of future penetration of solar, not only in the UK and Europe, but also at global level, without having to be so dependent on the presence of those subsidies.
Yeah, that's exactly what I also wanted to ask you, Ricardo, as an investor. You know, it's good to get into the mind of the investors. A lot of us would love to be in your mind at all times. This evolution towards merchant prices, how do you treat it in your fund? For example, has that impacted your return expectations? Has that shifted your geographical focus? Has that had any impact on how you approach the debt that you put in the portfolio?
It's a very relevant question. I think the way we structure the Foresight Solar Fund is we try to deliver a predictable, a stable cash flow to our investors. We have a 7% target dividend this year, for example. And in order to deliver that, it's important to have a high percentage of contracted revenues. So power sales or energy or electricity sales, if you focus in the UK, for example, our solar investments are expected to last for up to 40 years. So it's a long-term strategy. And in order to achieve those sort of returns and try to deliver some visibility on those cash flows, it's important to structure the sale of electricity in a way that delivers that element of contracted revenues. Historically, we had subsidies that would deliver that. And even today, the UK government is considering introducing new rounds of auctions to award new subsidies to new solar parks. However, a high percentage of those revenues are still resulting from the sale of electricity, which it's more challenging to, in a way, hedge or fix in the long term. So historically, any investment in renewables tends to have already an exposure to merchant prices. What we're seeing at the moment with this transition from a subsidized period to a what we call subsidy-free or merchant investment opportunities is that percentage of contracted revenues will decrease for investments. There are options in the market in a way how you can structure the way you sell electricity. So usually we put in place what we call power purchase agreements that will allow us to find an off-taker or a buyer for the electricity that we generate. And there are structures that allow you to sell electricity at a fixed price for up to 5 to 10 years. The way we approach the fund is that we always expect to have some exposure to power prices. So there's an element of merchant revenues in the portfolio in the long term. But we included that analysis in our expected level of returns. But from an investment perspective, the more merchant exposure you have, the higher the level of return you should expect. So higher contracted revenues, lower expected returns, more merchant exposure, higher expected returns.
And we should also note that, interestingly enough, there's been a strong recovery in power prices in Europe, probably with a certain link to COVID and out of COVID, maybe because some manufacturing has been re-centered towards Europe. I mean, there's a lot of different explanations for that, and analysts might throw some light for us. But has that, or have you already noticed, Ricardo, that it's bringing you new appetite from investors or making things a little bit even more appealing for investing in your project?
The investor community is aware of the relationship between renewable investment and power price exposure. Power prices can be volatile. We do try to manage. We have an active management approach to power price exposure by trying to identify opportunities to fix prices when they're considered to be attractive, and that allows to manage that volatility. As you pointed out, we have seen a strong recovery recently on power prices, especially since the end of last year. I think also the carbon element of power prices have a strong component in that. It's not only gas prices, which are still one of the key elements to consider when trying to understand what impacts the power of electricity in European markets, but as well we do have a cost associated with carbon at this point in time. And that's part of a policy that is in place in various markets, but most of Europe at the moment, that will allow that support and that transition to a low carbon economy. And that is creating as well an increase in prices. So at the moment, we're experiencing a high level of power prices. I think since we launched the fund, back in 2013. These are probably the period of higher prices we have seen. And that is obviously creating a positive momentum around these investments, because in order to make the returns work, you need to have a certain level of power prices to make the investment attractive.
Well, can I just jump in here? I mean, two things actually, Ricardo. Thank you. That's very interesting. One thing is what talking about the merchant and fixed proportion. What is the sweet spot, do you think, to have? I understood that you need to have a mix in order to deliver the targeted return to investors. That's the first part of the question. And the second part relates to what Olivia just said, the power prices, because we don't know where the power prices are going to go further. We rely on forecasts, but you only know exactly what future holds. So there are concerns within the industry about overcrowding, that the new entrants push power prices down and create this effect, so-called cannibalization. So how protected are investors' money in this environment in terms of, are they going to get the returns that you target and are you going to get enough profit to deliver those returns and progressive dividends to them?
So it's a very valid question. So if you focus on the fund that Foresight manages, the Foresight Solar Fund that was launched in 2013, since 2013 until today, we had experienced various periods of power price volatility. Last year was a good example, especially created by the economic restrictions imposed as part of the COVID, that impacted the economy. We had probably one of the periods, the lowest power prices that we have experienced since IPO, since we listed the company. And even in that scenario or relatively low power price environments, we still managed to deliver the target dividend that we've announced at the beginning of that year. So when we structure our investments, we run various financial analysis based on various power price scenarios to ensure that even in periods of low power price environment, we're still able to generate sufficient cash flow to pay our dividend targets. So the fund since launch has paid all its dividends on target. All those dividends were paid from operational cash flows. So that demonstrates that it's quite a resilient investment proposition. Solar from a generation perspective is very well understood. We generate based on what we call irradiance profiles, which is essentially we generate when you have daylight available. And that's extremely stable on an annual basis. So obviously we all know how difficult it is to predict the weather in the UK, for example, if you try to organize anything a week or two in advance. But in terms of on an annual basis, extremely predictable. And that supports as well having a relatively low risk investment proposition that even in low power price environments, we can achieve a minimum level of return for investors.
And I think we can also say to the community that, you know, I think people are very aware that we're using more and more batteries with solar parks now. In small territories, on islands, for instance, it's automatic. So every new project now is equipped with batteries, and a lot of tenders or PPA auctions oblige projects to come with storage of electricity at the same time to help regulate the grid. But an interesting point to bear in mind is that the battery also helps regulate the power prices positioning and therefore the IRR. So yes, it's expensive. The price of batteries has also gone down. The technology is improving. When we do our financial modeling and we work with our technical colleagues, we know better how to target the size of storage versus the size of a park. There's a lot of know-how in this area, but it has an impact on the profitability for sure. It helps the predictability. It helps to store, you know, the electricity when the power prices sometimes are too low and deliver them at better moments. So a new wave of financial engineering is probably going to take place on the back of the storage of electricity. I don't know if that matched your experience, Ricardo.
Absolutely. In fact, Foresight Solar introduced in February this year an amendment to its investment policy to allow to invest in battery storage.
Okay.
We've completed our first
Wow.
battery storage investment a couple of months ago. I mean, the way we looked at it is that, and you're absolutely right, the investment in renewable generation was in a way that a first phase of the decarbonization of the energy generation mix that we see in various countries. But with the introduction of renewables, you created also additional challenges to the way we manage the national grids, in the way we generate electricity, in the way that electricity has to be available in peak demand periods. And battery storage adds that flexibility to the system, and it adds a different layer of grid management that without it, it will be difficult to continue the progress and the penetration of renewables. So we see that as the second stage of the energy transition process, the introduction of flexible systems that will allow the normal operations of national grids without disruption that can be caused by renewables. So the battery storage investment opportunity is very much part of the core proposition now of Foresight Solar as well, because as you pointed out, it helps as well to manage your power price exposure in a different way. You can use the battery to create at portfolio level a different way of hedging your power price exposure, because you can essentially sell electricity at different periods of the day, in addition to providing services to the grid, including frequency response services, for example.
Oh, that's amazing. Actually, jumping into that mix, would it be fair to say that the future sort of system, renewable energy system, will include providers that is going to be a mix of wind and solar, say, and battery storage, and the big operators are going to have that mix that would provide more stability? Well, my question was really, is the future of the providers of the electricity is going to be like a mix of solar, wind, and batteries, and so it's like a big operator that would sell the electricity to the grid, and it will stabilize the system? And is that what you're seeing developing, Olivia? Maybe we'll start with you, and then Ricardo can tell us what they're doing in Foresight.
Yeah, that's definitely what we've seen already, I would say. So the last 2 to 3 years already, you can tell the mix is using battery to balance wind and solar output. Of course, all big utilities are looking at new technologies as well. So you've noticed a big rush towards hydrogen, and there will be a continuation of emergence of probably new technologies going forward. In my view, we are still in early days, both in volume of deployment and opportunities of investment, but also in use of technology. And the technologies that we know today, so the solar PV and the onshore wind, for example, will find their use and probably in a more sort of decentralized grid aspect, especially maybe for solar. And then, of course, a new stream of technology will come on board. But the move to decarbonize and to now retire a lot of coal plants in Central Europe, for example, is going to create that decision alone. Even forget about the nuclear, the sort of freeze on nuclear, just retiring many coal plants in Central Eastern Europe is going to create a very, very big necessity for investment in our current technologies.
Ricardo, what Foresight is doing?
I tend to agree. I mean, the trend that we're seeing, I think there's two elements to it. There's the governmental aspect of it and the commitment to net zero targets across various countries. But also, I think there's definitely a shift in investor perspective of renewables as well. I think clearly anything related with sustainability and ESG metrics is becoming more and more relevant on a regular basis. That's creating as well additional demand and additional support for additional renewable investments. And when I say renewables as well, let's incorporate as well the battery storage element of it, because they're becoming quite complementary in the way they operate. But I don't think there'll be one specific technology that will be able to be more relevant than others. I think the energy mix will always going to include a combination of technologies. In some markets, perhaps wind operates better. In some markets, solar might have additional benefits because of geographical locations, etc. So you need to look at it overall in terms of what each technology can offer, and you should include bioenergy, for example, as well in this analysis. Hydrogen, I agree, will have a key role to play, perhaps a bit earlier in the day, but that will continue to develop. And from a Foresight perspective, we are present in all those areas. We are a large solar investor, large wind investor. We have significant expertise in batteries. We invest in bioenergy, so we invest all across the energy spectrum. And that's what we're trying to offer as well, is solutions from an investment perspective to help this energy transition process and to help to achieve a lower carbon economy for the future. So that's the role we're going to play.
Well, thank you.
You also have the phenomenon that electrons that have been created with a green source, so let's say green electrons, enter into the cycle of manufacturing. And what you manufacture using the green electricity becomes green labelized as well. This is a very new trend that is taking off rather fast. The first obvious one is cryptocurrency. So you now have green Bitcoin, for example. It's Bitcoin that has been mined only with renewable energy. And the market is picking up on that and delivering a premium on the value of these products.
Perhaps to sum up our today's forum, could you think of a couple of more other trends for the future, and what do you expect, both of you actually, for this year 2021 to happen? I mean, Olivia, let's start with you.
We see a lot. We see a lot of new ideas and new trend and new things we're working on. One of them in solar is what I call solar everywhere. So aside from these big solar PV plants, we see solar being installed literally on every free surface of our towns at the moment. So this is very exciting. It's offering a lot of opportunities. We're also starting to work on what we call cross-border PPAs. So, for example, at the moment, we have requests from a farm producing in Morocco who wants to sell the power in euros across the Mediterranean and back into Europe. So this is going to take quite a lot of innovation in terms of legal work and financial montage, for sure. And definitely since COVID, a recenter of interest and appetite in Central and Eastern Europe.
Okay, thank you. Ricardo, what trends are you seeing and what is your outlook for 2021?
I think from a Foresight Solar perspective, I think the focus will continue to be on what we call the subsidy-free investments. So we've made a few investments at the end of last year in the solar space that don't rely on subsidies. I think that's a trend that will continue. And more involvement on the battery storage market as well. So we've made our first investment in May. There's a few other opportunities that we're reviewing at the moment. And we think it will be difficult moving forward to think of renewable generation without contemplating the battery element of it. So as part of that sustainable and energy transition process that we're seeing at the moment. But our expectation is that the demand for renewable projects will continue to be high. We expect to continue to see support from investors, especially with that element in mind. So we think at the moment we have a positive environment for the ongoing growth of renewables and the achievement of those net zero targets across the UK and Europe.
Okay, yes. Well, Thank you both, Olivia and Ricardo, for the fascinating discussion about investing in renewable energy in its various forms. And we hope to see you again at our forum sometime soon.
Thank you.
Thank you.